What's going on, traders? Hope everybody's having a great weekend so far. Happy Derby Day! Horses take off all day, but the main Derby, right around 7 o'clock. Place your bets. I like Chief Wallaby. Anyway, hope everybody's having a great weekend. As I said, my name is Shark, and today we're going to go ahead and do a market analysis update on the futures markets, the ES, the S&P 500, and NQ, the NASDAQ 100. We're also going to take a look at some other ancillary data points that I like to look at each and every week and help me gain a trade plan and a bias, potentially, for the next few weeks. So, we're also in the middle of earnings season, so we're going to take a quick peek at earnings, although most of the Mag 7 has already reported with a lot of beats last week from the major big Mag 7 names. So we are rounding the corner here as far as earnings. Of course, we had FOMC last week. No change on rates to be expected. And my name is Shark, so if it's your first time here, don't forget to subscribe to the channel. It means a lot to me. And let's take a look at the economic calendar first. And then we'll get into the earnings. All right, so what do we have this week? All right, we have a little Fed speak on Monday, May 4th, right before lunch starts. Tuesday, not really too much going on. ISM services coming out at 10. Keep an eye on that. Wednesday looks pretty quiet. May 6th, 1 o'clock, though, we do have Goolsby speaking. So I'll be paying attention to what they have to say. Thursday, May 7th, initial jobless claims, 8:30. Definitely be paying attention to that. Construction spending, consumer credit at 3 o'clock. A little bit more Fed speak there. New York Fed President John Williams speaking at 3:30. Friday, May 8th. Okay, here's the real big day. We've got non-farm payroll coming out at 8:30. This is probably the most important thing in my eyes for this week's economic data. And then we do have preliminary Michigan consumer sentiment at 10 o'clock as well. So really for me, Friday is the blockbuster day. Everything else is not quite as important to me. Okay, so let's take a look at the earnings calendar now, see what we have as far as earnings are concerned. A couple of names that we want to watch. PLTR going to be very interesting. We got Pinterest, PayPal, Shopify, AMD on Tuesday after close. Definitely be paying attention to that. Walt Disney reporting before the market open on Wednesday. And what else do we have here on Wednesday? ARM will be interesting after the close. Snapchat, a little interesting. FSLY, Fastly as well. Thursday, Coinbase after the market closes. That will be interesting. Blackstone, I'd be keeping an eye on this just because of the whispers of some issues in the private credit market. So I think that will be worth keeping an eye on. McDonald's as well. And nothing really going on Friday. So a couple names definitely here that we want to pay attention to overall. All right, now that we've got that out of the way, let's get into some charts. We've got a fresh month here, so we're going to start off with some monthly candles. Reminder now that this is all just for entertainment and educational purposes only, and in no way should this be viewed as financial advice. So let's jump right into the SPOOs here on the monthly chart, and what a rally we had from the lows. Pretty much exactly the same situation from last year. The end of March really marked those tariff tantrum lows, and here we are again. Regardless, Trump came out, of course, with the ceasefire. Then they're not doing a ceasefire, so we are still getting a little bit of a back and forth overall from Trump. But even with oil still rallying and being well over $100, markets just seeming to brush it off for now. So that is very interesting to see. And let's see what the monthly chart is telling us. Well, let's hear. Obviously, we can see this massive candle here on the April close, just unbelievable. The lows there of March down at the 63.70 area. Pretty much equal lows right from back in September here, which is very interesting to see overall. And then we broke out of that balance highs, making a new all-time high over the 70.49, which is really going to be key moving forward. And here we've got our first candle of the month of May, and looks a little interesting there, but we still obviously are very bullish. Okay, we are still over. We started to see that sell signal come in on the monthly here, showing a little of that momentum weakening still present, but we are still overbought, overall here on the monthly chart. Really nothing more to say as we go over the pivots, but really it's all going to come down to save some for the sake of brevity. The 70.50, 70.49 is really the spot that structurally we're going to be paying attention to personally. And as we move down into the weekly chart, we can really see here how that is really what we want to be watching overall here. And you can see, right, we have this range, balanced price range that we were trading in for a long time until we finally started to break down. So as long as we stay above these pivot highs here, right, this break of structure, we are good to go for the bulls. No reason to be overly bearish besides the numerous macro factors. But again, when we talk about those, they really take a long time to play out. And we'll see about some of this global supply shock with oil, which is going to start creeping in sooner than later over the next few months, and keep an eye on those prices at the grocery store as well. So what do we have here, right? We had that balanced price range. We got to watch, because if we do fail back below, it could be a potential look above and fail, trapping all this inventory up here and giving us another sell, and maybe back down into the equilibrium here of this balanced price range, maybe around 69.27, 69.30. Far ways to go, though. Of course, that really does not become valid at all unless we get back under. Again, don't want to be a broken record. You know the number, 70.50, 70.49. Interesting weekly candle here, though, closing. Not the best weekly candle close, so we might pull back a little bit overall. Really here over the last couple of weeks, though, we can say that we are forming a little bit of another balanced price range, which we did break over. So if we're going to be maybe looking for something a little bit more of a pullback before we potentially test this area, let's see what we can suss out here. Let's get into the yearly chart and see if we can't find anything as we zoom in. Okay, let's go. All right, so let's see what we got here. I mean, we can certainly pull this up here as a little supply area, but I'm gonna do right here. Okay, so this is what I'm gonna be looking at. Let's see price. If price can hold back over 71.90, 71.89, as long as we can hold over that, I think we are free and clear. We could even come back into these highs here from the 28th, right around 72.25. But really, for me, we've got equal highs here, giving me a little bit, actually 3 equal highs. So this is giving me a little bit more of a confluence, almost 4 actually. So I think that this is really the number that I personally want to be paying attention to for a little bit of a shift in my perspective. With that said, if we get back under, okay, well then we can talk about coming into the end of April's monthly lows here, maybe 71.30. Certainly get under that. We'll look to attack the bottom part of this range, and that's going to take us down 70.77. Say that 4 times fast, and then our key pivot. So I would say underneath the 71.89, look for the sells to potentially come back into these equal lows around the 71.30s. Under that, well, then we can come down to 70. excuse me, yeah, the 7130s, and we can come down maybe into that 77. Let's watch the C, though. We do have the figure right there as well, 7100, so big psychological level, so we'll see how that reacts as well. Don't have that much price data as we are now in price discovery mode and all-time highs, so, we're going to need to see a little bit more data, but I think that this few days is definitely worth trading off of, or giving us some per structural bias overall. And I'm really tempted here, and I think that this is the move. Let's throw this in to mark that off so we know. 7130, there we go. So under 7130 really opens the door to attack that major area, those prior balance all-time highs. All right, that's all I've got for ES here on the daily. Let's break it down. Let's get a little bit more granular. Now, again, as I was mentioning, we are in price discovery mode, so it's a bit tricky up here, but I do have some levels posted for everything, so we'll just take a quick look at them right now and see what we can take away. Got a lot of space here. Don't really have much in this area. Let's even go back further to see if there is even anything. There's none on there. Okay, so with that said, let's get back into the levels. Big gap there to watch. All right, so what do we need here? All right, boom, boom, boom. Okay, so from the intraday perspective, I'm here on a hourly chart now. Bulls need to recapture right these lows. We did a little sweep there, closing right on the area, 72.50. Get back up over that. Okay, I think that's the first good sign overall, but we're going to need to get over this last prior high here, 72.65, 72.62. Get back over that. I'll feel the trend here, the hourly trend will be a bit neutralized, and then we'll have to see, for me, over 72.75. That's where we get a little bit more bullish, and we can start attacking up into 72.85 and back to the new all-time high, 72.90s up here, and you can see we pretty much got stopped at 7,300. So that would be my path. Although if we do see price hang out over here, I would say that would be the most bearish thing overall. If we see some chop sideways, or even here, the bulls are still a little bit vulnerable overall, but we really need to see a true acceptance under that 72.49 and really getting underneath the prior day's low here, this little sweep. Underneath this, though, we could start to sell down. Again, I don't have much here. This could be a little thin, but I would be looking to attack these highs back, 9 o'clock on Tuesday or Monday. Anyway, down here, 72.20, 72.25. You can make a little zone there if you'd like. So boom, boom, something like that. I'd be looking to trade down. We find acceptance other 72.49. Let's see what we can do in reattacking these hourly high swing highs here. 72.25 to 72.19. Underneath that, all right, next highs over here, 72.07, and then right underneath. Really, yeah, we've got another equal high here, another hourly equal high right around the figure, 7,200. So we should just be aware. I'm not even going to mark that off. We just know that's where we might stop, being a whole psychological number, but we break that, 71.86 is what I'll be looking at. All right, let's move along here. Let's get back on the monthly chart. Let's move over to the Nasty Nas and see what we can take away from the tech sector's perspective. And it's going to be a lot of the same as far as the structure is concerned. Right here, these prior highs. So really, as long as on the monthly chart, really, and the daily, as long as we hold over 26,380, 26,375, no issues here. We start to break underneath, okay, then we can look to trade half down. I'd be interested in looking to see in tech a lot stronger than the ES yesterday, and And you can really see that in the monthly candle here, that the new monthly candle that has been formed. Let's flip over to the weekly and just see what it looks like, because we kind of had an evening star on the spoos, but no, as you can see here, much stronger, pretty much a full-bodied candle close there right at the highs. So no issues there overall, but let's see what happens. This is my zone that they need to hold, the high here from the week of April 13th. And then these prior highs from back in the, what is this? This is the start of the year, the week of the 26th, and this is back in the fall. The fall in what looks like to be October. What week is this? The 27th. So that is my zone. As long as we hold over that, we could be still looking for longs overall, right? And on the weekly here, last video we were watching these overbought signals come in on our longer time frames, and shebang, that did play out beautifully. Now we're coming back right into that basically 50% marker there, so we'll have to see what happens. The one thing actually, and it's probably going to be even more, I just want to look at the daily again really quickly here on the spoos. All right, now we're oversold, or excuse me, overbought on the spoos daily, so that is interesting, and I would definitely probably safe to say that it's the same on the NQ as well. So we've gone full cycle here, and definitely we were watching this. Unfortunately I missed. I mean, I didn't think that this was going to rip to new all-time highs. That's the last thing that I personally suspected, and I currently am in a short position on SQQ. I think I'm down about 6%. I had to finagle the trade a little bit, but we'll see what happens if we do get that retest. To me, structurally, it seems, would I want to be a buyer up here? No, not really, not at the highest high. I'd look for some weekly or daily pullback to get in on a long-term type of position. But there's a lot of macro things that are still out there, which are very worrisome. Either way, got to play what's in front of you, and I'm pretty upset I missed this trade overall. I think this was one of the biggest rallies from the lows. This made some historical precedent. I can't remember exactly what it was, but I mean, from the lows to highs. Let's just look at this for fun. Oh, about 55 points shy of 5,000 point rally in a month. Unbelievable, just absolutely crazy. And really, with the Strait of Hormuz still shut down and nothing really changing overall from that geopolitical standpoint. So but it is what it is, right? Okay, so that's the only thing. I would only be really interested in longs up in this area personally. Otherwise, we do have a very similar type of situation here. If we want to get a little bit more granular on the daily, we've got 1, 2, 3, 4 right here, kind of an equal high right here. So we can say, and it's matching really this prior day high as the low. So break a structure right there above 27. What is this? 27,540. We'll just call it 542 if you want to be specific about it, but 540, gotta hold that, right? And that was pretty much the lows from the start of the month as well as the highs from the 27th. So perfect retest there on an external pivot. But if we get under that, okay. Otherwise, it's just 2,800, right? 28,000. Why not? So I mean, we're just really just a little hop, skip, and a jump away from it. Let's see, overbought again though on the daily, so that's interesting, but that's not a reason, of course, just to go short. And if you really would like, we can throw in a little demand zone here using the high from the 29th. So I'll be watching the 27,540 for a potential buy. If we get underneath, last spot 27,400, 27,415, right in that area. Boom. But if we get back under, then I would suspect a little bit more downside. Maybe we come in, match these lows from the 30th right here, and you've got Nice double equal highs here as well. So I think that this would be a nice spot to potentially look at. Down 27,150. Underneath that, we can talk about attacking these lows from the 28th and then coming back into the 26, 340s, 8. I'm sorry about that. 26, 835 area. So these highs from the 17th right here in this zone. So that's what I've got there. Okay, let's get over into some day trading levels. Let's do this one on the 30-minute. Why not? And like I said, these levels are going to look a little bit different because we are in price discovery mode. Okay. And you can really see the difference in the strength of the tech sector versus the SPOOs. We had broken the opening range lows on ES and NQ. Pretty much only went to about equilibrium. Not even super strong here on tech. So what do we got though? We did break down a little bit from this little balance range that we were forming during the day on Friday. So I'd say bulls need up and over 27,815. Let's get some acceptance under that. Okay, then we'll look back 27,850. And if we get over that, we can go right back up into those highs. I definitely think that would be the play. Overall, I'm going to put that 850 there. 855 is fine. And then we can go ahead and attack those highs at 27,900. And that would be the pathway. We just need to get over 850, basically. And then we can attack those highs again. But let's talk about the bears. Way more fun. Okay, stay under. We certainly got to get under 27,800. But stay under 815, 825, right? We could sweep. Right, that certainly is a potentiality. We could sweep and then fail back underneath and then head back down. But first spot right here, 27, 650, 655, maybe 670, right? We got a little wick high here. So, you know, you could say that as well. But this is the level I've got here where we could retest if we do start to see a sell. Yeah, this 30-minute candle is huge, huge, huge displacement. I'd imagine this the pretty thin structure here on the volume profile overall. So, you know, if we start to really see some sell pressure, I wouldn't doubt to see that easily be filled down, and we can come head into this 27,650s, maybe 675, as I mentioned before. Under that, let's see the opening range lows from the Friday session down here by 27,600. I've got 27,595, but close enough for NQ. So pick your poison there, and that's why I like to use that supply and demand. You're not going to get anything to the tick. That's just foolish. So there you go. If we break underneath though, 27, accepting underneath 27,595, let's go ahead and attack these opening prices down here, 27,535. Break under that. Now that's going to be big, right? Look at this. High here. Touch point, touch. Break under that, 27,535. Then we can see some more sells. And I do have these equal highs here, same as SPOOs. I didn't have them mapped out, but I think for 30-minute, we'll do it. Boom. Oh, wow. Okay, 27,500. And then under that, we can talk about, and that's pretty much the opening range highs from the Thursday session. But underneath that, then we can sell down a little bit more. 27,440. All right. Okay. So let's take a peek at what's going on elsewhere. And just take a little look at RSP. Why not? Breadth has been overall strong, but this will be interesting just to get a little better sense. Okay, RSP did not make new all-time highs, and this is really showing me that this move has been driven more so by the mags and mag 7. So breadth, although overall strong, we did not make an equal. Did we even get an equal high? What's the high here? Nope. It's a lower high. So we didn't make a new all-time high. That's very interesting. Let's take a look at the equal weighted QQQE. Why not? Boom. Strong breath. See? Look at that. That's what you would want to see. So SPOOS, SPY, definitely the weaker market overall. All right, let's go over to some of our other data points that I enjoy looking at. Help me gain some more insight into the markets. And reminder again, if you're enjoying something, if you learn just one thing, don't forget, please, it means a lot to me. Hit that subscribe button. We're so close to that 2,000 followers. Let's get there. All right, guys, let's get into some of our other data points. Let's start off here. How many stocks in the SPX are trading over their 50-day period moving average? SPX A50R strong here. We came into the 50% marker and bounced over 50%. We are bullish. Over 50%. We are bullish. Everything is good and strong there. No issues overall. New highs versus new lows, looking strong, looking good. Over the zero line, no issues there. Okay, let's take a look at the bonds really quickly. All right, this is one thing that definitely has been a bit of an issue. Now, I am actually short on the bonds right now. I'm looking for TNX to continue to raise higher. I started to get up in this area here in these back tests, and we're seeing this fall down here. So bonds looking weak. No one interested in our debt right here at the moment. And this all looks like TNX wants to, yields want to continue higher, which originally was, given some power to the bears, but they have shaken it off for now. All right, let's keep moving along here. Let's look at credit spreads and our bond ratios. Credit spreads, risk off, we're underneath the 50 here. Off the highs. This just looks like sideways consolidation to look to go down. So risk on here. Credit spreads say risk on. And the bond ratios, okay, everything is strong here. Normally bearish over the 50, over the 50, over the 50. This one here at the bottom, our inflation ratio, really, when it comes to bonds, tried to break over these equal highs and coming back a little bit. Let's see if this thing starts screaming. Gonna be definitely keeping an eye on the IEF and TLT spread. That will be interesting to see as we have oil, of course, ripping and roaring still. So if this continues to remain strong with oil, you're going to see some of that inflation potentially peak in. So let's see if what this one does here at the bottom. But credit spreads look good overall. No risk right now as far as that's concerned. So good for the bulls there. But the bond ratios, I would say, are a little bearish because this is still saying that yields want to go up. Although they are going slow. Okay, one thing I did notice here. Oh boy. Okay. Now, this was one thing that I did notice. I'm not sure if I looked at it during the last video, but look at this rally in transports, right? Dow has not made a new high. Another divergence here overall in the markets. And I was noticing this divergence with the transports being up so high, with Dow not even there. Now transports have come back to life. Hey, come back and retest this area around the, 20,150 area to 19,615. Could be a buy point in that zone. We've massively cooled off here. Let's see if they come down. But there definitely some divergences in the Dow. Don't want to see that. I would say this could be a little bit of a canary in the coal mine. I would get a little bit more interested that this is quote unquote a little bit of a warning signal or potential canary in the coal mine if we start to see the transports get back under 19,600, 19,613. Then I will look at that a little bit harder if that actually breaks But as far as it's standing now, nothing really too crazy, but you gotta note the divergence, right? That was huge. Look at this rally, holy moly. So, all right, let's keep it moving along here. What's the dollar doing? What are yields doing? Okay, here's my trade on the yields, moving up nicely. Back over 4.3 here. Never broke underneath 4.2. So, yields look still pretty strong. Let's see what they do around this 4.36 area. If they can hold that and then continue back up to this equal high. And if they start to really get over 4.4 here, this 44, that would start to really be an issue, I think, for the market. Certainly up at 5, that would be just really bad. But one step at a time. First step, let's see if they hold 4.3. Let's see if we can match these highs. But really, we got to get over 44 for this thing to start getting going. Okay, the dollar selling off again, almost making equal lows, close, but recapturing our pivot here. 97, 92, 98, 98 holding. 4 hour, kind of looking like an inverted head and shoulders. Oversold, getting a little green momentum shift here. Could the dollar be making another move back up or setting up to make another move? Looks like it's possible. Strong hammer here. So this is really looking like it wants to reverse as long as it holds 97, 92. As long as that holds, looks like we got a good shot back up to 98. And the dollar, if it's moving up, could put pressure on the markets as well as mess with our gold, the gold trade, the metal trades. And they really have not been able to. They've been coming back, but the metals, the rates too, the yields have been messing with the metals trade. So it's been kind of a what's the right word? Kind of a struggle bus over there. A lot of headwinds for the metals overall, but I still think they are a good place to be. Okay, let's move around. Yeah, speaking of gold, why don't we take a look? Right, and I was getting, when this started happening here, why is this all like this? Oh, because I did some levels. Nope. Give me something blank. Okay, how about this? Okay, there we go. All right, so as far as this is concerned, taking a look at gold, and I thought, it was looking so good, and we were ready to go, but unfortunately, basically tried to recapture the daily 9 and 20. Couldn't do it. Back down. I'm still holding the 200 though, but this is kind of looking potential inverted cup and handle. I do not like this sell side curve here. It's not looking that good. Let's see if they can get back over the daily and 20 and hold, or the 9 and 20 and hold. Either way, not really looking the best for me. And this is just a bigger balanced price range for gold. Nothing really significant until we break up and over. I know we talked about that reversal, but this is the big area we got to get over, obviously, as you can see, over that basically $100.31 for gold, for the dollar. All right, inverted ZT. Are we cutting rates anytime soon? Well, it's short end of the curve here. It says no so far. If this is moving up, moving up gives us, basically says, less and less chance for rate cuts. You would want to see this falling, and that would signal that it would be more of a chance that we would see rate cuts. So far, nothing yet. Okay, let's look at the skew. Fine. Oil volatility still holding 72 here. Boom, 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 boom. You see those touch points. Okay, right there, still holding, tried to sweep, and it looks like it kind of wants to rip right off this. We'll see, though. It could be a bear flag, but so geopolitically driven. But this has not. I mean, we were up at 125. Now it's starting to cool down a bit, but this could kind of start to be kind of the normal, the new, what should I say, the new norm. I guess that's the word I'm looking for there on the oil volatility. So we shall see on that. Let's take a look at the put call ratio, and we had a buy signal. I do believe we were talking about here in the middle of the month. I was looking for it to come a little bit higher, to be honest, but nice contrarian signal there, along with our overbought signal, really showing the lows for the month. I did look at this, but I again didn't pull the trigger on the longs. I should have taken a nibble or something, but I did not, so I missed the whole rally. It is what it is. Either way, put call ratio back in our balance. Nothing really contrarian there. Oh, one thing, one red flag that I do want to point out: junk bonds in isolation. This is another canary in the coal mine here. You can see all-time highs here on SPY, but what's junk bonds doing? This should not be like this, and this divergence has been working for a while, but we continue to go higher. So this is kind of the one times where we've been seeing a divergence not play out. Very interesting here. Down the junk bonds go. So somebody's lying. It's either here or here. I don't know which it is, but so far the markets have been right. Junk bonds have been wrong, but this will lock up at one point or another, with either SPY coming tumbling down or the junk bonds ripping up, back up. Maybe we get some type of a rip, retest, and then a rip. So but certainly a red flag right here. Want to be cognizant of that. Okay, let's keep it moving wrong. And okay, we're obviously uninverted. This is just waiting, ticking time bomb here since the uninversion and the reinversion. This is still another macro thing that we're watching closely. Warning sign as well, but we've been over that. And what's the last thing? Let's go over some VIX. What do we got in the volatility front? They're killing all the fun, killing our fun with a nice strong VIX. Right, what do we say? Under 19, under 20. Never got back over for the bulls, so we just continued to drift down. But we're still above 15, 16. So I'm still watching that 15, 70, 75, 15 area. That's not changed, but as long as we hold underneath that, it's pretty likely that volatility continues to shrink off overall. From a deep backwardation, back in contango. We are good here on the VIX futures. Nothing wrong there. Back under 15 on the one-day VIX. Looking weak, under 100, under 105, under 103. So the VVIX, volatility of the volatility. Let's see if it holds 93. But overall, it looks like volatility just still wants to melt. So and that is what we got there. Nothing more to say. All right, I think that's everything I wanted to go over for this upcoming week. Is there anything I missed? I think not. Again, my name is Shark. Thank you so much for joining me on this week's video update on the futures markets. Again, if you enjoyed the content, if you learned one thing, don't forget, it's free. A follow would warm my heart. Really appreciate everybody tuning in. Remember what we say at the end of every video: a prepared trader is a profitable trader. So pat yourself on your back for doing a little analysis. Remember, your trades, ideas, everything is formulated when the market's closed, not while it's open, right? So then we have our levels, we have our game plan. So a prepared trader is a profitable trader. Trade your plans, plan your trades. And I am signing off. See you out there in the markets. Wishing everybody a great next 1 or 2 weeks. Until the next video, take care. This is Shark, and I'm signing off.